What's going on, everybody? Tiger here. Happy Sunday. Happy Sunday. Decided to sit for this video. I've been a little lame in the back, if you know what I mean. Pulled a muscle or a bone or something in there the other day. Somebody said, Tiger, you're getting old. I said, no, I'm not. I'm 42. I ain't getting old. I'm well seasoned. Okay, getting just about ready to throw on the grill, but not quite there yet. So it's all mindset. It's all in how you look at it, right? I still feel like I'm 21 at heart. So anyway, enough of that. Back to today's setups. This is the weekly watch list video. I'll try to keep it short and sweet. Yeah, let's just take a look. Let's dive right in. I mean, if I'm looking at my top setups, again, this is a1trading.com for anybody that might be interested in something like this. I'm not affiliated with them. I just love their tool so much. I like to talk about it, okay? It helps me. It saves me, on average, probably 2 hours a morning relative to before I had this tool. I was having to do so much more research. So it's just a dream. I've been trading over a decade, and this is the one tool I've been looking for forever. Just something to keep things short and sweet so I can take a quick glance at it to decide if I want to go look at a chart to see if there's a spot to buy and sell something. So if we take a look at our setups this week, we got the NASDAQ. Look at that. We're getting a very bullish rating. All right. Remember, very bullish is 10 or 9 or higher, I should say. Why NASDAQ? Well, let's take a look at the COT report. Okay, look at this. NASDAQ's actually on there showing that the big banks and institutions increased their position last week by 2.26%. So that's a really good sign for the NASDAQ. You know, it's not always the holy grail of indicators, but that's a pretty good indicator that if the big banks are buying something, it might be a good idea to look at a potential setup and ride their coattails. So the top setups is definitely matching that with like I said, a score of plus 11. There's the 2 for the COT that you see right there. Retail traders still think it's negative. They still think everything's going to the floor. So that's a pretty good diverging indicator when it comes to just simply scoping out to a 30,000 foot view and looking at who all the buyers and sellers are and where they're going. So yeah, you had the purchasing managers index reports going against NASDAQ, and so was the unemployment rate that you see over here, the 3 lone red squares we have, but everything else is blue. That means everything else is favoring the NASDAQ. So, I mean, if we take a look at the NASDAQ real quick, we'll look and see what we got. NAS 100 right here. Let me get rid of my drawings. So we had the swing low, swing high, higher low, higher high. So far it's looking pretty good. Now, the only thing I dislike about it is it's currently right in the middle of a daily supply zone. That's that box right here. All right, last up candle before the big down move. Now, I'm not too worried about that because that was a tiny up candle. And then we had a big giant wick up top. So you could say that wick is the equivalent of having a candle on this spot right here clear up to there, but I don't feel the most comfortable in buying something right there. I would prefer to see price just blow right through that zone, up to, well, I've already drawn it in. If I can see that price go above that supply zone and close, then I would look for a retracement down to buy somewhere, possibly down into here where I showed that demand zone on a 4 hour, like we see over here. Okay, it's also within the 38.2 Fibonacci level, not quite to the 50, but 38 or 38.2 or higher. Those are pretty decent pullbacks. Now, it's not the strongest of uptrends yet, okay, because we just had that big down move. So I would probably prefer it to come down to maybe a 50 or even even the 61.8, but I don't really see any great levels on the 4 hour chart. The only one I really see is the one at 38.2, just ahead of the 0.5, the 50%. So I say all that to say that if price were to retrace down, like I show you over here with my blue lines, I mean, I might take a stab at that. I don't trade indices too much, but if I see a good enough setup, I'll jump on it. I'll just lower my risk. So remember, I mean, even if something's not a grade A setup, you can still take the trade, you just might want to lower your risk. It's not worth putting in a full 1% risk or 0.5% or 1.5% or 2%. I mean, that once you start getting 1.5% to 2% of your total account, that starts getting a little sketchy, because you only need 2 or 3 or 4 of those to take off a big chunk of your account if you got trades go against you. So I like to keep it at the 0.2 to 0.5 range right now. But yeah, I mean, so long as I start seeing some good consistency with the smaller risk, then I'll look to increase at some points, and especially on a grade A trade, meaning I got my supply and demand zones lining up perfect, maybe a good Fibonacci level, good uptrend, excellent economics, the reports, so on and so forth. That's where you start increasing to a grade A trade. So I wouldn't consider this a grade A trade. I would consider this more of a B or maybe even a C. If price did come down here, I might take a stab at it. Like I said, I'll probably risk like 0.2% of my account, right? So yeah, that's what I'd be looking for NASDAQ. Let's take a look what else we got here. We got the UK 100. We got another index, CFD. So that's contract for difference. All right, something that you can trade within the index reports. So what was that again? That was UK 100. So there we go. So very similar setup. We had that big ugly move here a few weeks ago, and then we've rebounded quite nicely. Now, at the moment, price did, obviously, it's trying to make a turn here. Well, I see this little low point over here before, back in time, and that's what price is bouncing off. So that was a level of support. Okay, even if you were to use this whole move over here. I mean, I wouldn't include that too much, but this one is definitely a little more out there. So, former support bounced, blew through, came up, and now it's bouncing off that support, and it could potentially turn into a resistance. Well, I like that as far as giving me a retracement back into a demand zone. It's a top setup. Yeah, everything's looking pretty good except for the services PMI report. It was a little negative for the United Kingdom over there, but everything else is blue. Everything's giving me a bullish signal, very bullish signal. In fact, it's a score of a 9. So, I mean, let's take a look. We got my daily here. We got my 4-hour over here. That's a decent looking demand zone, but it's too high up. All right, we're too high up on the curve. Remember, I talked about the curve in video 3 of my technical analysis training. So I wouldn't want to buy right here. I'd want price to retrace further. Now, right on the 38.2 line, if I zoom in, is a 4-hour candle. Let me get rid of my master pattern indicator real quick. And by the way, I need to do a separate video on the master pattern indicator. It's an incredible indicator. It really showcases the behaviors of the big banks and institutions. All right, it talks about contraction points, which are very similar or even equivalent to demand or supply zones. And then it shows, so that's contraction, and then it shows expansion legs coming out above and below, and then we get a trend phase. So that's going to be its own separate video. I did realize I didn't do any analysis video on that yet, so I'm going to probably make a separate video on just that. But anyway, we'll worry about that on the later video. If we look back at that demand zone, it's a tiny zone, okay? We had a really good strong move out of it, but not the greatest volume at the bottom. I would have preferred to see some taller volume candles coming out of that zone. And plus, we've got a whole lot of candles to the left of it. So still, it's on that 38.2 level. But yeah, I'll probably steer clear of this just because, like I said, too small, not a great volume coming out of that. Price didn't go too awful high before it started retracing. I did have a pretty good fair value gap between that basing candle and then the second candle after. So that was good. But overall, it's just not that strong. So I say all that to say, I'll probably just ignore that one. 4-hour. Okay, so down here, more congestion, but no clear 4-hour candle. Same thing down here. If you go down to a 2-hour level, you start to see a candle further back towards the bottom. That's a little bit, that's a very strong candle, that green candle coming out of this basing candle here on a 2-hour time frame. But we'll worry about that if and when price comes closer to it. For all we know, the fundamentals of it might completely change in the sentiment. So we'll just ignore that for now. China 50, I don't trade China 50. It's just tracked on here. I can't trade it anyway just because my broker doesn't have that instrument. So I'm going to skip that. Now the Dow, look at this. So the Dow Jones. So remember all the negative news we've been seeing in the, or all the negative articles we've been seeing in the news, seeing on certain, news sites on TV. It's going to the basement. It's going to the floor. Let's take a look at the Dow. Do we have a reading there? We got a 7. Let's take a look at the COT report. So Dow, here we go. I mean, look, we've got about a 1.69% increase, so it's not bad. It's a pretty good. It's definitely better than a negative 1.69. So Dow, this is what the big banks and institutions bought last week. They bought the Dow and they bought Nasdaq. So those two indices, we're going to definitely keep those on our radar. And then they do still have the Aussie and New Zealand dollar. They did a pretty good net change of that last week as well. So that's looking good for my New Zealand dollar Canada dollar trade that I'm currently in. I'll see how that opens up at 4 o'clock today. We'll see if that continues up or if it comes back and stops me out for a small loss. Either way is fine. We'll take a look at it at that point. But so yeah, Dow. I mean, if I take a quick look at it on the chart, US 30. Here we go. It's just not. Look, here's what I see. We got a swing high, we got a swing low, and then we got a lower swing high, and then we got a higher swing low. So basically, this thing's trying to coil up on the daily chart, down, up, down. So it's basically looking like this. I mean, if I just take a quick drawing to it, I mean, look, it's just you got that downtrend like this. But over here, if we draw to the opposite side, we got an uptrend. So look, price is just coiling up right here. So typically when price coils up, regardless of the time frame, as soon as price makes a decent move through the top or bottom line, then that's where those buyers and sellers are going to step in. And a lot of times price is just going to go flying upwards or flying downwards. Okay, and that's just purely a technical reaction. So we'll keep an eye on that. I'll get rid of those lines because I know where they are in my head. But yeah, quite interesting to see the reaction after price does break either the upside or the downside on that. But having said that, my algorithm is projecting a daily demand zone candle down here. I won't like that candle unless price goes above all this noise right here and closes up here somewhere. Well, actually, I drew that in as well. So I would like to see price go up, close somewhere in this area, and then start to retrace and then look for a potential daily 4-hour demand zone candle within that area. Okay, and that would look good too because we've got this pivot low over here, this former support that prices just went through. It acted as a resistance point here, and then we'll see what it does here. But I'd like to see it go up, close, come down, and touch that support line again. Hopefully there's a 4-hour demand zone candle that forms within that, and then we could potentially look to take a buy on the Dow. So New Zealand dollar, Japanese dollar, that's giving me a rating of a 7. So let's go take a look. Now I won't worry about getting into this trade simply because I'm already in a New Zealand dollar trade. Okay, I got the New Zealand CAD going on. If I find a decent spot on a New Zealand Japanese yen, as long as I'm still in that New Zealand Canada dollar trade, I probably won't look to place a trade. Why? Because when it comes to trading, you don't necessarily want to double up on the same currency. So think about it. I'm in a New Zealand Canada dollar trade. If that goes against me and then I turn around before that happens, I get a New Zealand dollar Japanese yen trade. Well, now I've just doubled up my loss within one currency pair. So I don't like to place multiple trades. In other words, I'm already in a trade for the New Zealand dollar. I'm already in a trade for the Canada dollar. If I see a good setup on that same currency, on either one of those currencies within another currency pair, I don't want to double up my risk. I just want to stick with the trade I've got. Or if I like that setup better, then I'll close that trade, that New Zealand Canada dollar trade, and then I might go to open up that other a trade on the other pair, New Zealand Japanese yen as an example. I hope that makes sense. A lot of people don't care. A lot of people don't think about little things like that. But yeah, you could double your win for the New Zealand dollar in this example, but you could also double up the loss. And the whole point in trading, the number one The number one most important thing in trading is risk management. So I do not want to double up my risk. Now, if I've had two, the only way I would change that thought is if I had two very small risk positions. Okay, that's a decent way of giving it another shot. But on the New Zealand Canada dollar, I think I'm already at 0.5 risk. I don't want to double it up to 1% risk on one currency. I'm just going to stick because I'm very conservative on this. I had a small account several years ago that I ended up trading 5 and 10% risk, and I pretty well blew that account. Okay, so uh, that's I'm glad I'm where I'm at, and I'm glad that I did blow that small account because I've learned those lessons. Now, I didn't have ideal trading and ample trading time back then. I was working regular jobs, so I just didn't do a good job of the risk management. Nothing more to say on that. So lost out on that account, and now I'm using those lessons. In other words, I invested in this lesson, this risk management lesson. So I won't double up on my risk unless I got two small positions. So I hope that makes sense. If you have any further thoughts or questions on that, please obviously comment, like, send me an email, Facebook, YouTube, LinkedIn, any of those socials, I'll be there. So anyway, back to the New Zealand dollar, Japanese yen. Yeah, I don't really see anything here. I've got some 4-hour demand zones up here, but they're puny and they're well above the 38.2 level, retracement level. So I'm not too interested in that. Yeah, just not interested in it. That's what else we got here. Pound dollar, United States dollar. We're getting a score of a 7. Let's go take a quick peek at that. That's at the top. All right, so look, we got a nice strong uptrend, okay, over the last, basically since the middle of January. So the better part of this year, as you can see, the pound has been increasing in value relative to the U.S. dollar. We had that slight hiccup back when the tariffs were introduced, but we've recovered, and now we're at pretty close to yearly highs. So, yeah, and I've actually got an alert set, as you can see right here. Now it's not on my 4-hour. It's not on my 4-hour. Oh no, wait, is that 4-hour or 1 hour? Yeah, well, I think it's 1 hour or my 30. I think it's my 30-minute. Yeah. So yeah, I mean, if I zoom all the way down to a 30-minute, you can see I do have that demand zone forming here, but not my favorite. See, look, I say not my favorite a lot if you haven't figured this out yet. I don't know. It's a mindset. So I don't look at how can I get into this trade. I try to look at how can I not get into this trade. It's just a little bit difference of a mindset. So many people I see all the time, they look at, I want to get in this trade. Like I did last week with the gold trade. Remember, I called myself out on that? The FOMO, okay? I called myself out on it. So I didn't follow my rules. This is the hardest thing in trading, is following your own rules that you set. So, and it's still a work in progress. The greatest traders in the world still have this challenge. Okay, I'm not claiming to be one of the greatest traders in the world, but I'm just talking about other people. They'll tell you the same thing. At some point, they've all had FOMO. At some point, they've leveraged up too high as far as their risk per trade. So it just is what it is. You might as well acknowledge it and move on. So anyway, I try to talk myself out of a trade, not into a trade. When I can't talk myself out of a trade, I might as well put the trade on. Okay, so anyway, yeah, I got a 30-minute demand zone on the pound dollar, but the legs out, they had a hard time breaking the previous swing high. So not too interested. I always put alerts around spots, even though I know I'm probably not going to place a trade there, just to see how price reacts. Excuse me. It's just more programming for my brain, just to see what price is doing. But yeah, I mean, if I go back to my 4-hour zone, my 4-hour time frame, go back to current price, if I put my drawings back on, yeah, you'll see it's just too high on the curve. And I don't see any good zones, so I'll probably skip that. What else I got here? What else? New Zealand dollar. Okay, let's go take a look at New Zealand US dollar. Yeah, same thing. I plugged in an alert just to see how price reacts. That's a 30-minute demand zone as well. If I were to scroll or if I were to zoom in, I liked it because there was a resistance point further back in time over here. I drew that line just to mark it. In fact, I had another one here, and then I think I had a third one way back here on the daily. Where am I at? Yeah. So basically right here. Okay, looking back to August 2024. So look, we got three pretty decent support resistance line that are going right through that, albeit tiny 30-minute demand zone. So look, trading is trying to find as many variables as you can to support a trade. So we'll just take a look and see how price reacts. Now, it's not quite to the 38.2 level. Not saying I'm going to place the trade, but I'm just going to watch it if price hits just to see how price reacts. What else we got here? New Zealand dollar. So we got euro dollar at a 6 rating. Okay. Euro dollar is going to look very similar to the pound dollar. We got a daily demand zone candle right here, right around that 61, the 61.8 level. Okay. So 4 hour. Now I do like this one. I'll tell you, I do like this one for the euro dollar. I got an alert set down here on this 4 hour demand. Let me get rid of my drawings right there. Excuse me. I need a drink of water. This weather change affects me at times. So yeah, look, excellent looking 4 hour candle. Had a pretty decent fair value gap coming out of that zone. And you can see price just skyrocketed. Now price is quite a ways away. I mean, we're talking, if I'm looking at my pips, we're 370 pips away. So it might take a week. I mean, unless we have just some serious news or report come out, it's going to take at least a week to 2 weeks for price on a daily to come all the way back to that area. But if price comes down fairly quick, like I'm talking, something like this. Oh yeah, I keep forgetting I always draw these in ahead of time. So yeah, if I see price go from where it currently is down at a relatively quick speed, then that's a good sign. Remember, if you drop a basketball from the top of a house roof, okay, you drop it, it's going to bounce straight up. If you throw it at an angle, it's going to bounce up, but not as high. So I would like to see price fall relatively quick right into my 4 hour demand zone. Now, because this is such a tiny demand zone, I won't put my stop loss below that point. I'll put my stop loss down here where you see that red line. That way I can incorporate the daily demand zone. So we're putting the stop loss below the daily for the 4 hour purchase. Hope that makes sense. And because that zone's close enough to the bottom of the zone anyway, I might as well just incorporate the rest of the daily demand zone just to help the risk management. Give me a little more wiggle room. So that's looking like a pretty good trade. I mean, if I can get that, if I can get price to fall, I really, really, really like that. Really do. Low-ish on the curve. Okay, you see these this orange demand zone for my weekly. Up here, you got my orange demand zone for the supply or for the weekly supply. Orange supply zone for the week. Daily demand zone for the week. Okay. It's kind of in the middle between that, but if I look at it from the swing high, swing low on the daily, it's still fairly low. Not as low as I would like it, but I do like the area because we're getting confluence with the daily and the 4 hours. So looking pretty decent on that. Let's see. I haven't talked much yet with you guys about short selling, so let's just skip the rest of those. I'll look at those later on my own. We'll take a look at what's bearish. So we got the dollar, Canada dollar, dollar Swiss franc, euro pound, euro New Zealand dollar. So let's take a look at the dollar, Canada dollar. See if we can find a short sell spot. Okay, so here's my here's my high point, my low point, got my Fibonacci levels in there. I do have an alert set, it looks like right here at the just above the 50% retracement level. I've got a supply zone right there. I think that's a 2 hour, yeah, so 2 hour supply zone. Okay, if I zoom in, okay, we're looking at that candle. 1, 2, 3, 4 candles. So it's within that 4 to 6 range, so it's still good. It's not great, but it's good. Over here to the left, you see we have a former support. Hopefully will turn into a resistance, and it is right around that same supply zone. So that's looking good. Just scroll back up to my 4-hour. Yeah, I mean, we got a supply zone candle here, but again, that's lower than the 38.2 level. So I want price to retrace. I want people that did take this short sell, I want them to start taking their profits, which is going to, of course, make price rise. And then you're going to have people down here trying to buy the dip, but they're catching a falling knife because on a daily, look at that, it's going straight down. Anybody trying to buy this market they're basically trying to catch a falling knife. So let's let them push price up to our supply zone where we can short sell it and smoke them fools, right? That's how it works. That's how it works. So yeah, Canada dollar short sell in that zone. I got my alert set, so if it hits, we might take a look at placing a trade there. It might take a week, might take a few days, might take a week, maybe even a couple weeks, but ideally no longer than a week and a half. I mean, I want this thing to come up within the week to touch for me to short sell it. Dollar Swiss franc, that's going to be a similar short sell, and these are both -6s. So -5 or lower is a bearish. So -6, that's pretty decent. Same thing. I mean, we got a demand zone forming on the daily. It pushed through this low. I like that. We come up to the 4-hour chart. We do have a 4-hour supply zone forming within the daily supply zone. So I like that. And then up, let's get rid of this line. So if you see this red line, this is my VWAP. This is my volume weighted average price line. This is something institutions do look at. So what I did is I went to a high point. I plotted that in, and this is just basically, think of it as a dynamic supply zone, a dynamic resistance point. Okay, so you can see price respected that. Went down, up, touched, dropped it back down. Came up, touched, pushed it back down. Came over here, got close, but still price went away from it. It's been fading ever since. So the thinking is it's like a magnet. Think of it as a magnet. Sucking price back up. Well, if it hits it within my supply zone, oh, that's a beautiful, beautiful short sell idea right there. Because it's not only getting the unfilled orders in my supply zone, the unfilled institutional orders to push price back down, but it's also got the VWAP within that supply zone. Oh boy. Oh boy, that's and you can see I drew in my lines last week on what I want to see it do. So I want to see it come up, touch that supply zone within the smack the VWAP, touch the supply zone. That's excellent confluence. So now we got a daily supply zone. We got a 4-hour supply zone within it, and we got the VWAP within that 4-hour supply zone. Ooh, that'd be a sexy short sell right there. That's probably at the top of my list for the week. In fact, dollar Canada Swiss franc. I've already got obviously I got my alert set, so we'll see how it works out. Euro pound, Euro New Zealand dollar. We'll just take a quick look at those. I don't trade Euro pound a whole lot just because it's kind of a slower moving currency pair. Okay, so it's saying we should sell, and we got price in an uptrend over the last few months, but then of course, so it wants us to sell. So we kind of have a supply zone candle forming, but I don't like it because it hasn't moved far enough away yet. Hasn't even gotten back to this former resistance point to turn into a support. I just don't like it. I don't like it. I mean, we got a 4-hour zone right in there. In fact, I need to get rid of this and do this. Hold on, let's do this. Yeah, I don't like it. I can tell you right now, I don't like. Oh, come on. Sorry. I got a swing high, swing low. There, that's what I'm looking at. Yeah, I don't like it. I don't like anything about this chart, so I'm just going to skip it. Lastly, Euro New Zealand dollar. Let's see here. Where's my Euro New Zealand dollar? Another one I don't trade too much. Typically has higher spreads. So the trades just cost a little more. Yeah, that's very similar to euro pound. I just don't like it because if you incorporate the past few months, price is going up, but yet this is giving us a sell. So it's basically saying catch a falling knife to the top side. While I agree with it, while I like the signal, on the technical side, I don't like it because it's just been going up on the higher time frames. Now, it obviously has to pick a point and start going down and breaking all these lows, but I need price to prove to me that it's made a trend change. So I just don't like it. But yeah, I mean, that's just a quick look at some of the top setups. Yeah, like I said, dollar Swiss francs, a really good, sexy looking short sell opportunity. If I can get price to come back up to my, come back up to my 4-hour zone. Woo, that looks good. Yeah, and then we got of course, the NASDAQ and the UK 100. So yeah, I'm just pretty much staying with my New Zealand dollar, Canada dollar trade. Now, if you look, it's now a 4, so it's technically a neutral. So obviously, this isn't where I'd want to go buy it, but I'm already in a position because when I got into it, it was a 7, remember? So it's since dropped, and a lot of that is obviously because of, let's see here, this month. Last week when we had, hold on a second, this month is what I'm trying to do. The 24th when we had, or no, the 25th, so Friday, when we had the retail sales number that was good for the Canada dollar. So that took it from from 7 to a 4 basically. And then not only that, yeah. So anyway, in other words, I'm staying in the trade. I'm going to let it do its thing. All right, it's either going to come down and take me out of with my stop loss, or it's going to blow through. We're coiling up. We're getting nice and tight. So it's going to break one way or the other. It's either going to break to the short side and stop me out for a small loss, or it's going to break up. We'll take a look. We'll just let it do its thing. Last thing is, yeah, back to my COT report real quick. I mean, Australian dollar had a high net change, so a lot of the big banks stepped in, and as you can see, they bought 7,400 contracts. They got rid of 3,100 short contracts, which makes that basically a 10,000 to the long side net. So yeah, 4.86. So I'm going to keep my eye out on the Aussie dollar, the pound dollar, and my New Zealand dollar. That's looking good for my New Zealand CAD trade. Now they did buy Canada dollar as well. Okay, look, 2.5. So kind of cancels itself out. And then what did they sell? So look at this. They got rid of the U.S. So they got rid of. So they added So they added short positions on the U.S. dollar, and then they added 5,700. They did add 2,900 long positions, but they got a lot more short positions, which makes that a negative 4.3. Look at this. U.S. dollar and gold are both. They sold both of those last week. Well, remember, they're pretty much the inverse of each other, the dollar and gold. But they sold and they got rid of both. So we're just in a screwy market. Russell 2000, it was short sold as well. The S&P 500, you got those two. But then on the other side, like I said, you have the Dow and the NASDAQ they bought. So they basically bought two of the major indices, but they sold the other two indices. So it's just split. That's just a little bit of split. But yeah, obviously not too interested in buying the dollar because the big banks are short selling it. Now gold, same thing with gold. I mean, it's like I showed on my video last week, gold's been just going straight up, parabolic. Well, now the big banks are like, nah, we might need to slow this down. So as you can see, negative 4%. They got rid of. They increased 14,000 short positions, and they got rid of 12,000 long positions. So yeah, wow. Let's take a look at gold and then we'll be finished. Let's just go see gold real quick. All right. So yeah, price has just been going straight up. But last week they decided we need to go net short. So yeah, we might see price this week start coming down. And then if during this week they start buying into positions, if I can get a positive net rating Friday, then next Monday morning, when we start getting some volume, hopefully we can get a nice spot to buy down in here somewhere, which is where I put that alert. I think I put that for, what was that? Oh, come on now. For 2 hour maybe? Yeah, 2 hour. Look at that. We got a demand zone right here. That's just below the 61 level, but it's down close to the kill zone, the 71 to 88 level. So we might take a look at that. And if we look at the daily, you see that same alert said it's right through that former resistance point that might turn into a support. So definitely not a trade I'm willing to take this week. Also because gold is only a neutral rating of a 4. Now the last 2-3 months, gold had been way up here, 7s, 10s, 11s, but now we're getting a 4. So this is the first time it's been neutral in months. But it's not 0. It's not -2. So you get one more piece of good news for gold, and that'll shoot right back up to 5 or 6. I like to trade things that are like a 6 or higher. I know 5 is a bullish rating, but give me a 6, give me a 7. That way it's really proven itself. Because think of it, if you got a 5 rating, all you need is just one of these boxes to flip negative by 1, and then it's back down to a 4. So I just like higher numbers. Give me a higher score. So I need gold. We'll see what the big banks do this week, but we won't know till Friday, around 4 o'clock or so, 4:30 my time, Central Time, when we see the COT report come out for what they did this week. But yeah, as of right now, gold's a no-go. Yeah, that's basically it. I can't think of anything else. Like I said, I'll do a video at some point about the to show you guys and gals what the master pattern indicator does. It's a real powerful tool, and we'll go from there. So that's about it. That's all I can think of. I'm going to stretch my back some more today. Y'all have a lovely Sunday. Oh, today's my sister's birthday. Happy birthday, Tina. Peace out.